ExamPrep.School. Vermont Agent's Title Insurance Exam, Exam Code SERIES 14-38. There are 5 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. General insurance, insurance regulation, real property, title exceptions and clearing title, title insurance. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under Vermont insurance regulations, which of the following is not a requirement for an individual to obtain an initial title insurance producer license? A. Holding a bachelor's degree. B. Being at least 18 years old. C. Passing the state title insurance producer examination. D. Demonstrating good moral character. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. The correct answer is holding a bachelor's degree. As Vermont law specifies passing the examination, minimum age and moral character, but does not mandate a college degree for initial licensure. Reason B is not correct. Being at least 18 years old is a statutory minimum age requirement. Reason C is not correct. Passing the state title insurance producer examination is required for licensure. Reason D is not correct. Demonstrating good moral character is mandated by Vermont licensing statutes. Question 2. Which of the following best describes the continuing education requirement for title insurance producers in Vermont? A. Complete 12 hours of title-specific courses every 2 years. B. Complete 30 hours of general insurance courses, including 3 hours on Vermont laws, each year. C. Complete 24 hours of industry-specific courses, including 3 hours on ethics, every 2 years. D. Complete 15 hours of ethics courses biennially. The correct answer is C. The correct answer is completion of 24 hours of industry-specific courses, including 3 hours on ethics every 2 years, which aligns with Vermont's biennial CE mandate for title insurance producers. Reason A is not correct. The requirement is 24 total hours, not just 12 title-specific hours. Reason B is not correct. Vermont requires 24 industry-specific hours biennially, not 30 general hours annually. Reason D is not correct. Only 3 ethics hours are required within the 24-hour biennial total, not 15 ethics hours. Question 3. Based on the Vermont Insurance Commissioner's statutory examination powers, which action may the Commissioner lawfully take regarding an insurer's affiliate-maintained records during an examination? A. Request a court order before reviewing records stored off the insurer's main office. B. Examine any records, including those held by an affiliate offsite, without judicial approval. C. Insist on inspecting only the insurer's original books and reject certified copies. D. Limit the review to records related solely to policies issued within Vermont. The correct answer is B. The Commissioner has broad statutory authority to inspect all books, records, accounts, and documents of an insurer or its affiliates relating to its business, whether on or off-site, without needing a court order. Reason A is not correct. A court order is not required for off-site record reviews under the Commissioner's examination authority. Reason C is not correct. Certified copies are acceptable. The Commissioner may examine originals or copies. Reason D is not correct. Examination extends to all business records, not only those for in-state policies. Question 4. Under the Fair Credit Reporting Act, which format is required for the disclosure to an applicant that a consumer report may be obtained? A. An oral statement made before the application is signed. B. A clause embedded within the application's terms and conditions. C. A clear, written statement in a standalone document delivered before obtaining the report. D. An electronic notice sent within 5 business days after loan approval. The correct answer is C. The Fair Credit Reporting Act mandates a clear and conspicuous written disclosure in a standalone document delivered prior to procuring a consumer report. Reason A is not correct. An oral statement does not satisfy the FCRA's clear and conspicuous standalone written disclosure requirement. Reason B is not correct. Embedding the disclosure in terms and conditions fails the standalone document mandate under the FCRA. Reason D is not correct. Providing notice after approval is too late. FCRA requires the disclosure before obtaining the report. Question 5. Which of the following statements best distinguishes a peril from a hazard in the context of a property insurance policy? A. A peril is the event or cause that brings about loss, whereas a hazard is a condition that increases the likelihood of loss. B. A peril is a circumstance that increases the chance of loss, whereas a hazard is the event causing the loss. C. A peril refers to the insured's financial exposure to loss, whereas a hazard denotes the potential for gain. D. A peril is a formal claim filed under a policy, whereas a hazard is the legal responsibility of the insurer. The correct answer is A. The correct answer defines a peril as the direct cause of a loss and a hazard as a condition or circumstance that increases the chance that the loss will occur. Reason B is not correct. This reverses the definitions by describing peril as a circumstance increasing loss probability and hazard as the event causing loss. Reason C is not correct. This confuses the concept of peril with financial exposure and misrepresents hazard as potential benefit rather than risk. Reason D is not correct. This incorrectly defines peril as a claim and hazard as insurer liability, neither of which aligns with standard insurance definitions. Question 6. Orlando acquires insurance covering his retail inventory against theft. After policy issuance, he intermittently leaves the back entrance unlocked. Discontent with pay, an employee covertly sells some premium merchandise, then reports it as stolen to file a claim. Which action best exemplifies a moral hazard? A. Failing to lock the back entrance doors after the insurance policy took effect. B. Selling inventory items and falsely reporting them stolen to collect insurance proceeds. C. Choosing a policy with an elevated deductible to decrease the overall premium expense. D. Omitting disclosure of newly purchased inventory when submitting the policy renewal application. The correct answer is B. A moral hazard arises when an insured party intentionally misrepresents or causes a loss to gain insurance proceeds. Selling inventory and falsely reporting it stolen is a deliberate act of dishonesty to claim benefits, fitting the definition of moral hazard. Reason A is not correct. This illustrates a morale hazard, where carelessness or indifference increases risk but lacks deliberate intent to defraud. Reason C is not correct. This reflects a risk retention or financial decision, not an increase in loss exposure due to dishonesty. Reason D is not correct. This involves misrepresentation at renewal, more akin to adverse selection, not the post-policy fraudulent behavior characteristic of moral hazards. Question 7. Which of the following activities must be expressly authorized in a producer's appointment contract, rather than being covered by implied authority? A. Collecting premiums upon policy issuance. B. Soliciting applications for new insurance policies. C. Issuing temporary insurance binders. D. Delivering finalized policy documents to insureds. The correct answer is C. Issuing temporary insurance binders constitutes binding authority, which must be explicitly granted in the appointment contract. The other activities are considered implied or incidental authority. Reason A is not correct. Collecting premiums is incidental to policy issuance and is covered by implied authority, not express authorization. Reason B is not correct. Soliciting applications falls under the implied authority to procure business and does not require explicit contract language. Reason D is not correct. Delivering policy documents is generally permitted under implied or incidental authority without express contractual grant. Question 8. At closing, a buyer pays a one-time $325 premium for an owner's title insurance policy. 2 years later, an unrecorded boundary encroachment is discovered that decreases the property's value by $75,000, and the insurer covers the loss. This scenario best illustrates which feature of title insurance? A. Obligation to restore the insured to the position held prior to a covered loss. B. Unequal exchange of value where a small premium secures coverage only if a loss occurs. C. Presentation of a standardized policy form without negotiation. D. Guarantee that title is free from all defects at issuance. The correct answer is B. The correct answer is the aleatory nature because the policyholder pays a relatively small premium in exchange for the insurer's obligation to pay only upon the occurrence of a covered loss. Reason A is not correct. This describes the indemnity principle making the insured whole after loss, but does not emphasize the unequal exchange inherent in aleatory contracts. Reason C is not correct. This refers to the contract of adhesion, which highlights standardization rather than the conditional value exchange of aleatory agreements. Reason D is not correct. This suggests a warranty against defects, which is inaccurate since title insurance indemnifies against loss rather than guaranteeing absolute defect-free title. Question 9. Under Vermont law, which of the following most accurately defines marketable title at the time of sale? A. Title free from a reasonable doubt as to its validity, except for minor statutory exceptions. B. Title completely free of all material defects, liens, and encumbrances of any kind. C. Title that would qualify for a standard ALTA title insurance policy without any exceptions. D. Title conveyed as fee simple but subject to permissive easements disclosed in public records. The correct answer is A. Vermont statutes define marketable title as one free from reasonable doubt regarding its validity, subject only to minor statutory exceptions, ensuring a purchaser would not face litigation over superior claims. Reason B is not correct. This option is too strict by requiring absence of all defects, whereas marketable title allows minor exceptions under Vermont law. Reason C is not correct. This conflates marketable title with insurability. Marketable title concerns litigation risk, not policy terms. Reason D is not correct. This focuses on deed form and disclosed easements, but marketable title addresses validity rather than conveyance instrument. Question 10. A title search for a proposed commercial property uncovers a recorded mechanic's lien from a contractor for unpaid work. The buyer's lender insists on evidence of marketable title before funding. Which outcome best describes the effect of the unresolved lien on marketability? A. The lien will expire automatically after a statutory period, so marketability is unaffected at closing. B. The buyer can waive the lien if purchasing a standard owner's title policy. C. A standard title insurer will cover the mechanic's lien risk without additional endorsements. D. The lien clouds the title and must be paid or bonded off before the lender will fund the loan. The correct answer is D. The correct answer is that an unresolved mechanic's lien clouds the title and must be satisfied or bonded off prior to closing, since lenders and buyers require a clear chain of title to deem it marketable. Reason A is not correct. Mechanic's liens do not expire automatically. They remain in force until formally released or paid off. Reason B is not correct. A standard owner's policy excludes unsatisfied liens from coverage, so a waiver does not remove the cloud. Reason C is not correct. Standard policies exclude unsatisfied mechanics liens. Coverage would require a special endorsement. Question 11. Under a standard purchase contract, the seller fails to deliver marketable title at closing. The contract includes a 10-day cure period for title defects. The buyer notifies the seller of a recorded easement that restricts property access. Which best describes the buyer's rights under the cure period provision? A. Buyer may rescind the contract immediately due to the title defect. B. Buyer may instruct a title insurer to pay off the easement and deduct from the seller's proceeds. C. Buyer may close and adjust the price to account for the easement without waiting. D. Buyer must allow the seller the 10-day period to remedy the easement, and if not cured, may then terminate or demand indemnification. The correct answer is D. The correct answer is that the buyer must permit the seller to use the agreed cure period to correct the title defect. If the easement remains unresolved after that period, the buyer may terminate the contract or seek indemnity according to its terms. Reason A is not correct. Immediate rescission is inconsistent with a cure period that gives the seller a specified time to remedy defects. Reason B is not correct. Title insurers do not pay off easements on the buyer's behalf under a cure provision. Seller is responsible for correction. Reason C is not correct. Closing with a price adjustment bypasses the contractual cure process and is not permitted by the cure provision. Question 12. Which of the following accurately describes the covenant of seisin in a general warranty deed? A. It is a present covenant requiring the property to be free of liens and easements at the time of conveyance. B. It is a present covenant that is breached, if at all, at the time of delivery if the grantor does not hold title. C. It is a future covenant obligating the grantor to defend the grantee against lawful claims to the title. D. It is a future covenant ensuring that the grantor will perform all necessary acts to perfect the title after delivery. The correct answer is B. The covenant of seisin is a present covenant in which the grantor promises that they hold title and have the right to convey the estate. If title is lacking, breach occurs upon delivery. Reason A is not correct. This describes the covenant against encumbrances, which guarantees the property is free of liens and easements at conveyance. Reason C is not correct. This describes the covenant of warranty or quiet enjoyment, which obligates the grantor to defend against lawful claims after conveyance. Reason D is not correct. This describes the covenant of further assurances, which requires the grantor to perform acts after delivery to perfect title. Question 13. After a boundary line dispute created a cloud on title, the neighbor agrees as part of the quiet title action to convey any interest without warranties. Which type of deed should be used to eliminate the cloud? A. Special warranty deed. B. General warranty deed. C. Quitclaim deed. D. Sheriff's deed. The correct answer is C. The correct answer is a quitclaim deed because it conveys whatever interest the grantor holds without warranties, making it ideal for clearing clouds in a quiet title action. Reason A is not correct. A special warranty deed still contains express warranties limited to the grantor's own acts, making it unnecessary for simple cloud removal. Reason B is not correct. A general warranty deed provides broad covenants and warranty obligations beyond what is necessary to clear a cloud. Reason D is not correct. A sheriff's deed arises from foreclosure proceedings and may carry defects rather than being used specifically to clear title clouds. Question 14. A purchaser acquires title at a foreclosure sale and receives a deed that conveys the property without express warranties, but implies that the grantor held title. Which deed was most likely delivered? A. Special warranty deed. B. Bargain and sale deed. C. Quitclaim deed. D. General warranty deed. The correct answer is B. A bargain and sale deed transfers title by implying the grantor held it, without including express covenants or warranties matching the described conveyance. Reason A is not correct. A special warranty deed includes limited warranties covering only the grantor's period of ownership and thus contains express covenants. Reason C is not correct. A quitclaim deed conveys whatever interest exists but does not imply ownership and provides no covenants. Reason D is not correct. A general warranty deed provides broad covenants covering all periods of title history, contradicting the absence of warranties. Question 15. A grantor signs a deed and deposits it in escrow with instructions to deliver to the grantee upon the grantor's death. Which requirement for valid delivery of the deed is not being satisfied? A. Grantor's present intent to transfer title. B. Recordation of the deed. C. Direct delivery to the grantee instead of to an escrow agent. D. Inclusion of a habendum clause specifying estate type. The correct answer is A. Valid delivery requires the grantor's present intent to transfer title immediately, which is lacking when the deed is held in escrow until a future event. Reason B is not correct. Recordation affects priority but is not required for the validity of delivery. Reason C is not correct. Delivery into escrow can satisfy delivery if present intent exists. Direct transfer is not strictly required. Reason D is not correct. A habendum clause defines the estate but is not necessary to establish delivery. Question 16. Which phrase must be included in a deed to properly create a joint tenancy between two grantees? A. As joint tenants in severalty. B. As tenants in common with right of survivorship overriding joint tenancy. C. With equal undivided interests. D. As joint tenants with right of survivorship. The correct answer is D. Only the phrase that expressly grants a right of survivorship between co-owners creates a joint tenancy. Absent explicit survivorship language, the conveyance results in tenants in common or sole ownership, and general references to undivided interest do not satisfy the four unities requirement. Reason A is not correct. Severalty refers to sole ownership and cannot establish concurrent ownership with survivorship rights. Reason B is not correct. This describes tenants in common and does not satisfy the requirement for joint tenancy with survivorship. Reason C is not correct. Equal undivided interest indicate shared ownership, but lack express survivorship language, so they do not create a joint tenancy. Question 17. Which act by one joint tenant will sever a joint tenancy at common law? A. A joint tenant's will disposing of the interest at death. B. A mortgage executed by one joint tenant solely as security for a loan. C. A deed from one joint tenant conveying the interest to a third party. D. A lease of the joint tenant's interest for a term greater than life. The correct answer is C. A unilateral conveyance of the tenant's interest to a third party severs the joint tenancy by destroying the unity of title. Mortgages, wills, and leases at common law do not transfer title inter vivos and thus leave the joint tenancy intact. Reason A is not correct. A will takes effect only at death and does not affect the joint tenancy during the grantor's lifetime. Reason B is not correct. Mortgages function as liens and do not transfer title at common law, so they do not sever the tenancy. Reason D is not correct. Leases create a temporary possessory interest and do not break the unity of title required for joint tenancy. Question 18. Three siblings, Anna, Ben, and Claire, inherit a vacation cabin and take title without specifying the form of co-ownership. By operation of law, they hold as tenants in common. Anna then conveys her undivided one-third interest in the cabin to her nephew, Lee. When Anna later dies intestate, which description accurately reflects the ownership interests? A. Lee holds Anna's entire one-third interest. Ben and Claire each continue to hold their respective one-third interests. B. Lee holds a life estate in Anna's one-third share, with the remainder passing to Anna's heirs upon Lee's death. C. Ben and Claire acquire Lee's interest by right of survivorship upon Anna's death. D. Lee and Anna's intestate heirs share the one-third interest equally. The correct answer is A. The correct answer is that Lee holds the full one-third interest, because in a tenancy in common, each co-tenant's interest is fully alienable, and Anna's conveyance transferred her entire share, leaving nothing to pass by intestacy. Reason B is not correct. Tenancy and common interest do not create life estates and remainders. Anna's conveyance transferred her full interest outright. Reason C is not correct. Tenants in common have no right of survivorship. Surviving co-owners cannot inherit another share automatically. Reason D is not correct. Anna conveyed her entire interest during life, so no portion remains in her estate for heirs to share. Question 19. In a meets and bounds land description, what term refers specifically to the compass direction in which a boundary line runs? A. Call. B. Monument. C. Course. D. Tier. The correct answer is C. The term course denotes the compass direction of a boundary line in a meets and bounds description. It differs from call, which combines both course and distance. Reason A is not correct. Call combines the direction and distance but does not isolate the compass direction term. Reason B is not correct. Monument refers to a physical marker, not the compass direction. Reason D is not correct. Tier is unrelated to directional measurement in mites and bounds. Question 20. When a physical monument conflicts with the distance and course calls in a meets and bounds description, which controls the boundary location? A. Courses. B. Distances. C. Calls. D. Monuments. The correct answer is D. Physical monuments take precedence over written courses and distances when there is a conflict, because they represent the actual boundary markers on the ground. Reason A is not correct. Courses are written directions but yield to actual monuments when they conflict. Reason B is not correct. Distances measure length but cannot override an existing physical monument. Reason C is not correct. Calls include both course and distance, yet a monument still controls over those. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.